Is Nvidia the undisputed tech giant of our times? Well, what if I told you there are some rising stars out there ready to give Nvidia a run for its money?
For Nvidia, that rallied a whopping 24% in yesterday's trade, one of the largest single-day gains in the value of the US stock. Moves followed after companies' stellar revenue forecast reflecting positively on the potential of AI.
Sure, Nvidia has been a dominant force in the tech world. But is it the right stock for new investors? Not necessarily. It's got a heavy price tag, and its return on investment isn't the best in town. That's why in this video, we're going to explore a thrilling world of competing stocks that could steal the spotlight from Nvidia. And if you're dying to know what's best to invest in, make sure to like this video and subscribe to the channel. Let's kick things off with Qualcomm. In the third quarter of 2023, Qualcomm faced some challenges. Their results didn't meet expectations because they had too many unsold products, like smartphones and IoT devices. This happened because the economy was tough and China was recovering slowly. But things are looking up for 2024. Qualcomm's an exciting chance in the world of generative AI at the edge, and their stock price is reasonable when you think about what it could be worth in the future. In the same quarter, they didn't have outstanding results, but they did as well as people thought they would. They made $8.4 billion in total. Of that, $7.2 billion came from one part of the company, and $1.2 billion came from another. Their car business grew by 13%, but the part that deals with phones and IoT devices had some trouble, because China was taking its time to get better, and the world economy wasn't great. In the next quarter, Qualcomm expects to make between $8.1 billion and $8.9 billion. And for every share they sell, they expect to make between $1.80 and $2. They're counting on China's economy getting better and more people buying phones. Qualcomm is all set for AI, especially in generative AI at the edge.
This is the milestone we've been waiting for to establish Qualcomm as an AI company. The reality is when you think about those things, you want to generate any image that you want to share with somebody, you want to do that in real time. Think about what Microsoft is doing with search, and you want to chat with the search results. For you to make all of that happen, you can't run everything on the data center. You're going to have to bring the AI to the devices. And the ability to create that much processing power in a smartphone and run that without compromising a battery life.
They're working with big companies like Meta Platforms and Microsoft, and they know how to make computers that don't use too much power. Qualcomm is getting ready to make smartphones that can do AI stuff and catch the wave of growth with more stuff to watch and higher prices. If you're thinking about buying Qualcomm stock, it's a pretty good deal compared to what it usually costs. That means it's a good risk if you're looking for a reward. They're not promising anything huge, but Qualcomm could make a lot more money if things get better with phones in 2024. They're also thinking about the long run with AI, cars, and IoT devices. Qualcomm is a big deal in the AI world, and it's changing all the time. At number 2, we've got Quantum C. This stock is a major contender in the quantum computing arena, and it goes by the name Quantum C, with the ticker symbol QSI. Now, here's the thing. Right now might just be the perfect time to get in on Quantum C, especially when others might be feeling a bit unsure. Quantum C isn't your run-of-the-mill tech company. It's rocking some seriously advanced tech that's ready to change the game. But wait, there's a twist. Just a little while back, on August 7, Quantum C released its Q2 2023 earnings report. And let's be real, the market didn't exactly throw a party. Q2 revenue came in at just $200,000, way below the expected $400,000 mark. To make matters worse, they revised their future guidance downward. And if that's not enough drama for you, they hit a roadblock with the key product. And there were hiccups with their AI software. The result? Their share price took a wild roller coaster ride, plummeting by a whopping 30% in one day. And the downward trend didn't stop there. But hold on a second. Before we jump to any conclusions, let's dig deeper and figure out if this is just a case of the market overreacting to some bumps in the road. Amidst all the ups and downs, Quantum C holds a lot of promise in the protein sequencing market. It's almost like they possess a magical tool for uncovering the secrets of proteins. So, what's their secret recipe for success? Well, QuantumC's innovation depends on their silicon-based qubits, which opens up a whole new avenue in the world of quantum computing. This positions them perfectly to disrupt not just the gaming industry, but a whole array of other sectors. QuantumC's financial foundation remains as solid as a rock, and their commitment to fixing any problems with user feedback shows they're in it for the long haul.
This trend that is happening, which is the merger of physical and digital spaces. And that's going to happen everywhere. So we invested for more than a decade. Every single device, there are about 60 plus devices of virtual reality, augmented reality, mixed reality. They're all using Qualcomm chipset. And we have been working with our partners, of course, Meta, Samsung, and Google, in order to build those devices. I expect that the next computing platform is going to be glasses. I can see a scenario that you're going to have your companion glasses.
With a head start in the thriving protein sequencing market, their potential is through the roof. There's a pretty solid chance they could transform into a major player in the profit game. Let's dive into number 3 on our list, Taiwan Semiconductor, or as many know it, TSMC. Now, TSMC has been facing some rough times, and its recent guidance hasn't been as strong as we'd hope, echoing the broader challenges in the semiconductor industry. Despite these hurdles, TSMC remains an exciting prospect. Why, you ask? Well, let's take a closer look. TSMC stocks has a glint of promise, thanks to its appealing valuation and its pivotal role in the ever-evolving technology landscape. Don't let the present cloud your view of the future. TSMC's long-term growth story is still a page-turner. Their focus on artificial intelligence and investments in groundbreaking technologies like N2 and the Arizona Plan are keeping customers interested. Sure, their recent Q2 earnings report might not have set the world on fire, but it wasn't exactly a shocker. The CEO had hinted at a softer outlook in previous quarters. The revenue guidance, while not breaking records, falls within the expected range, and their margins still stand strong. In the ever-changing tech sector, it's crucial to look beyond the short-term fluctuations and focus on the long game. TSMC isn't just sitting idle, they're gearing up for the future. They're invested in a shiny new R&D hub in Jinshu, all geared toward cutting-edge process technology. This commitment aligns perfectly with technologies like N2, N3, and N3E, which are set to be the stars of the revenue show in the years to come. TSMC isn't shy about embracing AI either. They're putting their money where their mouth is with a substantial investment in an advanced packaging facility.
While we have recently observed an increase in AI-related demand, it is not enough to offset the overall cyclicality of our business. We now expect the foundry industry to decline mid-teens, and our full-year 2023 revenue to decline around 10% in US dollar terms.
The result? We can expect robust growth in this segment over the next decade. While the short term may have its share of challenges, TSMC's financial foundation remains rock solid, and their operational efficiency is still top-notch. Their ability to navigate the volatile sector and create a value for shareholders reflects some pretty smart management. Now, here's the deal. TSMC is no small player in the industry. They're an absolute powerhouse, and even though there might be some near-term uncertainties, their strategic position, financial prowess, and technological expertise makes them a solid choice for long-term investors. Oh, and here's a little bonus for you. With the potential for some price dips due to market volatility, this could be a golden opportunity to consider adding TSMC to your investment portfolio. They're like a shining beacon of innovation and resilience in the ever-evolving tech world. Now, let's talk about number 4 on our list, AMD. If you're on the hunt for a stock that can give Nvidia a run for its money, look no further than Team Red. AMD has been in the ring, duking it out with Nvidia in the GPU market. But here's the twist. Their real shot at glory might just be in the stock exchange. Allow me to break it down for you. The AI sector is where the big money is, and AMD is eyeing a piece of that pie. Forecasts predict a whopping $150 billion market by 2027, and here's the kicker. In contrast, AMD raked in $5.4 billion in Q2 revenues. As the AI arena keeps on booming, everyone wants a slice. and AMD is positioned perfectly to grab a substantial chunk of this expanding market.
AMD, we know, is not Nvidia when it comes to the GPU market, but it is positioning itself as the next best alternative, something customers want, especially when it comes to price point. There is some rumors that Microsoft may already be a customer. Maybe we'll hear a little bit about that in the event today. Maybe Meta will be next. But Scott, I'll just end with this one name. An honorable mention has to be TSMC, because we talk about all these AI chips. TSMC, Taiwan Semi, doesn't necessarily design them, but it makes chips for Nvidia, for AMD, for Marvell, for Broadcom.
Now, let's talk about one of AMD's star players, the Instinct Me 300 Accelerator series. Their new innovative chiplet technology aligns perfectly with what data center clients are looking for. As AI models get smarter, more processing tasks are shifting to the edge, and demand for AI-powered CPUs like Ryzen is on the rise. Despite a temporary problem in PC design due to inventory adjustments, AMD's Ryzen lineup is poised to bounce back and snatch up market share. Now, let's talk about gaming. AMD Radeon gaming GPUs is also emerging as a hot ticket for AI projects, delivering top-notch performance and cost-effectiveness. Admittedly, there is a bit of uncertainty in the air when it comes to outcomes, but here's the bottom line. AMD's AI potential is shining bright. Their growth across various segments, strategic product launches, and advancements in AI applications all point to a favorable risk-reward ratio for savvy investors. As AI takes center stage, 2024 could very well be the year when AMD steals the spotlight. That wraps up our list of stocks that could give Nvidia a run for its money. If you're thinking about investing in Nvidia, it's always a good idea to do your own research and give these stocks a closer look. And make sure to like this video and subscribe to the channel for more investment content like this one.